There's a deep bench at Berkshire. From that deep bench, Warren eventually tapped Greg, and so promoted him to vice chairman. And at this most recent annual meeting indicated that he has been gradually delegating more and more of his role to Greg. So when managers of the businesses have a question or need some advice or need an introduction to somebody, they tend not to call Warren anymore. They tend to call Greg. And Greg loves it. And I think there's an interesting advantage, I guess, a plus for Berkshire, because Warren, never really ran a business. He never was an operational manager. He's an investor, and he bought all these companies and would certainly have some leadership skills and some sense of organizational design, but he wasn't an operations person, in terms of customers or products or branding or marketing, managing for change and leadership. Greg has done all that. So when the managers have a problem in the old days, they'd call Warren. He'd probably give them some terrific, wonderful advice, guidance, and then introduce them to somebody. With Greg, I think they're probably getting immediate operational insight on their problems. So I think look, Warren's irreplaceable, and he's got galactic skills no one will be able to fill in. But Greg has some strengths that Warren might not have had. Some managers hide within Berkshire. There's some businesses that are lagging, but not because the economics have deteriorated, because the manager's not leaning in. And I don't think Greg will operate the same way. We were just discussing, he's an operations person. So when he sees this business is not performing at its peer or better, I think he'd be more willing to, within the framework of autonomy, just say, yeah, we need to coach a little bit. How can we solve this so that we continue with the commitment to permanence, even with autonomy, but with, I call it intelligent autonomy, and so don't need to sell the laggards because we don't have them. Ajit Jain, we started this conversation asking about what contributions Charlie Munger made to Berkshire Hathaway, and we said that was considerable. Warren would tell you that Ajit made even more valuable contributions than either Charlie or Warren did. He used to have a joke that said, if the three of us are at sea in a sinking ship and only one of us can be saved, save Ajit. Ajit came to Berkshire in 1984 from McKinsey. He had been a consultant and he wasn't satisfied in that job, and he was very attracted to the insurance business at Berkshire Hathaway because he has a very analytical mind, can calculate risks and probabilities, and so it was a really neat match for him. Warren hired him, and he went to work executing, figuring out how to price complicated risks and business policies and catastrophes and stuff like that. And so he really led the insurance businesses at Berkshire to be some of the most formidable in the business. And so when they elevated Greg to vice chair eight or 6 years ago, of the non-insurance businesses, they appointed Ajit vice chairman of all the insurance business. And so he has broad oversight into 6 or 7 different large insurance companies. We were talking also about how Warren benefited from having Charlie as a sort of co-equal number 2. I think there's a way that Greg Abel has Ajit Jain as a sort of co-equal number 2. If he's having a problem,
sure,
Ajit's the perfect person. Also, I think that that partnership between Greg and Ajit also adds a lot of value. On the investment portfolio side, we've been talking about what Greg and Ajit are overseeing are these wholly owned businesses, but Berkshire also owns minority stakes in common stocks, and Warren has been helped in managing that portfolio by 2 outstanding investors for now going on 20 years, Todd Combs and Ted Weschler. And with them, it is really interesting because about 5 years ago, the CEO of one of their very important insurance subsidiaries, Geico, that's the famous car insurance company with that gecko creature.
Oh, sure. Mm-hmm.
Well, the longtime CEO of that business, Tony Nicely, was retiring, and so they needed to find a successor, and Todd expressed interest in it. And so Warren asked Todd Combs to become CEO of Geico. So I think he still plays a little bit of a role in the investment. After all, Geico is one of the companies that has capital that needs to be invested, but he's really
Yes.
now kind of leaning into that operation. And the other notable thing at the succession plan that had been announced until just 2 months ago had been that, well, Ted, with Todd's help, would take over managing that portfolio. What Warren announced at this year's annual meeting was that those guys will still be involved in it, but Greg will actually be the responsible person. So he's going to have oversight of that too. And now that's, it's obviously an important role, but note that in terms of relative size, the stock portfolio is about 1/10 of the overall Berkshire Hathaway. So 90%, what Greg is overseeing otherwise is really most of the value. And that 10%, it's not as if they're doing lots of trading every day. I mean, they make adjustments and do fine tuning, and it's important. I don't mean to diminish it, but to have it as an addition to Greg's remit is not, it's not going to tax him. It's not going to overwhelm him. He'll be perfectly capable of overseeing that as well, I think. Berkshire shareholders don't typically have an appetite for receiving a dividend. Most of them are taxable shareholders. Most of them have other income, other sources of liquidity, and so receiving a dividend imposes a tax on them whether they like it or not. So Berkshire has in the past tried to use some of that excess cash by buying back stock from people who want to sell. So I think they'll continue to try to do that, to use some of that cash. But so that's a subtle, the policy I think will stay the same, but the calculation might be different.